Holy fuck, boys. I don't know what the hell is going on or why this is being so lame. But we will attempt this one more time. If this doesn't work, I don't know. I'm probably just gonna have to try another day. But let me know in the chat if this glitches out. But I'm hoping this works. All right. So we'll start from the top. Sponsored by Bybit. Shout out to Bybit. Please use the link in the description. They've got a sign up bonus thing going on right now. You click the link, you can claim up to $600 in free rewards. All you got to do is sign up, put some money on there, do some trades, follow them on Twitter. Very easy. So shout out to the Bybit team. Thanks for that. We're going to get right into the charts because I assume most of you have been watching me struggle with this for the last hour. So let's just get right into it. All right, so we're in a range, right? And basically, the whole point of kind of what I've been talking about for the last 4 or 5 weeks that we've been in this range is you really have two options as a trader. You can avoid this completely, whether you think it's untradeable or you don't want to trade it at all, totally fine. Or you can take advantage of it and realize that actually if you have the right framework, i.e. you identify the range early on, there's been a lot of very easy trades that you can take at the range lows to the range highs and back and forth in perpetuity until we get a breakout. So initially we were working with this range here. And there's been several trades that have been pretty straight up to trade back and forth, right? We have all of our longs forming in the lower part of the range, all of our shorts forming in the upper part of the range, right? So it's been very straightforward. It's been as easy as using a fib, putting on your fib tool. Here's where all the longs are formed, right in our sweet spot, right? Where do you think all of the shorts have formed? Right? Right in the sweet spot, but on the short side. All of the big shorts have essentially formed, except for this one that kind of deviated above, right in the sweet spot. So all that we've done, all that I've taught you guys to do over the last month is identify the range. Once you identify the range, now you have a framework where you can look for longs and shorts, right? And that gives you a huge advantage in your trading because now you have areas in the chart where you're only looking for one thing. What can be very difficult about trading is if you're like, I don't know if we're in an uptrend or a downtrend. I don't know if we are in a consolidation pattern. I don't know if this is support, if this is resistance. If you don't know any of that shit, how do you know what type of trade you need to be taking at that point in time? If you don't have a bias, right, how do you know whether you want to long or short, right? Because I can find a bullish swing failure pattern in a downtrend. Maybe it gives me a trade, maybe it doesn't, but regardless, if I'm trying to long a bullish setup in a downtrend, I'm counter trend trading. The high time frame order flow is down. If it's bearish, we're making lower highs and lower lows, any longs that I take are counter trend. And vice versa. If we're in an uptrend and you're trying to short the entire way up, maybe you'll get a few right, but for the most part, you're trading counter trend. You're fighting the current, right? You're trying to swim upstream. That's not what you want to do. You want to be swimming with the direction of the current. It's going to make your life a whole lot easier. So in an uptrend, you want to be longing. In a downtrend, you want to be shorting, right? So in a range bound environment, it's a little more tricky because really the whole idea of a range is we don't have a discernible trend. We don't have an uptrend or a downtrend. Maybe we do on some of the lower time frames, but we don't have a discernible trend. So how do you know where to long, where to short? That's where the range becomes valuable. Because when you're in an uptrend, what are you doing? Right? You're longing support, right? And then you're holding. In a downtrend, right? You're shorting resistance and then you're holding. Lower highs, lower lows, higher highs. It's easy. When the trend is a little bit trickier to determine, using a range can give you an advantage because now you have a framework where you can identify your bias. When we're in the upper part of the range, my bias is to look for short setups. When we're in the lower part of the range, my bias is to look for long setups. Okay? So we want to continue to focus on that until we break out of this range. And that's what we've had. We've had multiple opportunities to get long near the range lows. Big SFP, move into the range low, profit take near the range high, into resistance, right? Exact opposite happening here. We're now in the upper part of the range, right? I like drawing my rectangles even though I have a rectangle tool. We're in the upper part of the range. We get a big swing failure pattern into the upper part of the range, into supply. What are we doing? We're now looking for shorts. And then back again, we're down in the lower part of the range, right? What are we looking for? We're looking for reasons to get bullish down here. Back up into the upper part of the range. What happens? We get rejection, again, at supply. We dive deep into the lower part of the range. What happens? We get a swing failure pattern. Move back up to the upper part of the range. What happens up here? We come into resistance. We get a swing failure pattern. And a swing failure pattern there. Right into resistance, right? So again, we trade that back down. And now what has happened? We're in the lower part of the range. And we've had another big swing failure pattern into the range lows. So you need to be looking to get long down here, right? And that's what we did. I longed here the other day. We shorted up here. We longed down here. And it's just rinse and repeat over and over and over again until the range breaks. So guess what's going to happen on Twitter? If this goes up to here, what do you think is going to happen? Same shit that happened here, right? Everyone is going to get bullish into the range highs. And what are we going to do? We're going to take profit on longs and we're going to look for reasons to potentially short up here. Because just 3 days ago, 2 days ago, the entirety of Twitter was bearish, thinking that we were going to 12K, right into the range lows, right after we SFP'd the lows. And now we're moving up and we're already like 10% off the bottom, even more, and everyone is now piling in bullish, thinking that we're going to go to 60K, right? So the way that you know that we are in a range outside of just the price action itself, right? Like when the price action is obviously going sideways, we're in a fucking range. But another thing that can be kind of a good indicator is the sentiment on Twitter. When people's sentiment is shifting what seems like daily, right? One day we are uber bearish, the next day we are uber bullish. Go look at Twitter sentiment yesterday versus right now. Yesterday, you're seeing charts that are showing 12K, 20K, 5K. Today, you're seeing charts that saying, just now, in the last couple hours that we've started going up, we're going to 40, we're going to 50, this is Wyckoff accumulation. Like, there are people who have been consistent. I'm not saying like everyone who posts this thing is like, there are people who've been consistently bullish at the range lows. That's great. But when you see the majority of people having their bias flip to different extremes almost every other day, that's a good indicator to you as the trader that we are in a range, right? Because that is what's generally going to happen is at the lows, people are going to get bearish, and at the highs, people are going to get bullish. It's the exact same as when we're trending, right? And we're in an uptrend, we make a high, and then we pull back. And what happens? Oh, we're going up. We're going to go up, buy the dip, buy the dip, buy the dip, buy the dip. And then we come all the way back down to an area of support where we expect price to find support. based on X, Y, and Z. And what happens? Bearish into support, right? And then everyone's like, oh, I longed the bottom, right? And then another high gets formed, then the same shit, right? Everyone's calling for higher, 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 higher. Oh, we're going higher, we're going higher. Uh-oh, we're fucked, short everything, and then we bounce. It's the exact same thing in a range, right? So this is in an uptrend, right? People get bearish into support, into the range. It's just going to happen faster, and people are going to flip from bullish to bearish as we just continue to oscillate between the range low and the range high. And a great example of this has been this last month of trading. You can go on Twitter and closed back above right here. Now I want to be looking for longs, right? Now I want to be looking for longs. And so whether you longed this or you longed here, the price action lined up. We're at the range low. We've got the bullish price action. Whenever I say you want to see bullish price action, that generally means an SFP, higher highs and higher lows, some sort of bullish structure forming, right? And then the fact that we had extreme bearish sentiment here going into it, all of that lines up and adds up well that this is a good place to be looking for a long, right? So what you want to do, sorry guys, I can't look at I can't keep up with the chat because I'm worried if I stop talking, the stream is going to die. It rugged again? There's no way. There's no fucking way. It looks like it's good. I'm just going to keep going, guys. So you want to have multiple pieces of confluence that line up with your trade idea, right? And that give you the confidence to step in when everyone is screaming, right? So when everyone is screaming that we're going down and it's over and we're at the range lows, that's a reason for you to, at the very least, start looking for reasons to get long. It doesn't mean you just need to blindly long the lows, but it's reasons to potentially look to get longs, right? Bro, I have more RAM than anyone in the world. I have unlimited RAM. I've never had issues. I don't understand what's going on today. Someone is fucking with me. I'm being targeted. They don't want you to get this alpha. That's what it is. They don't want you to get this alpha. They're trying to take me down. Wait, listen to this one. It's a gorilla. They don't want you to have this alpha, guys. But I'm going to give it to you anyways. All right. So I think the concept of ranging has been fucking hammered into your guys' heads at this point. You know, Jesus Christ. Okay. Video is delayed massively. I honestly have no fucking clue what the fuck is going on. Okay. Sure, I'll turn the camera off. Let's see if that helps. All right, let me know if it's smoother without video. All right, so the way that you want it, the reason why I made the range a little bit smaller, right, is just to essentially tighten the areas in which I'm looking for setups. So the way that I treat trading is just like a sniper, right? So you're looking through your scope and you're trying to zoom in on a target on a particular area. So the less of an area that I need to survey, right, the more tight and I don't know what's going on, guys. The better, right? Because if I'm trying to survey this huge area in price and I don't know where I want to be looking for longs or shorts, you're kind of fucked. So the more you can reduce that area saying, okay, this is exactly where I'm looking for longs, this is exactly where I'm looking for shorts, the better. So is it seriously fucked? I don't know, guys. I'm just gonna chat and fuck it. I don't know what's gonna come out at the end of this. So I've reduced my range from here to here. Okay, so less area that I now need to cover in terms of what I'm looking for, where to be bullish, where to be bearish, right? So again, into the range lows, we want to be looking to get long. So when we had this most recent big spike into the lows and you saw everyone shitting a brick, really what we had here was a swing failure pattern of this low and then a close back within the range. That in itself is a long signal. Now what you can do is you can now zoom in and you can look for a reason to get long within this SFP. Right? So what do you want to see? You want to see bullish price action. You want to see reasons to get long. So when we had the SFP, you had a breaker here. You also have bullish market. The breakup, the kind of the point of origin of the down move, right? Or of the move away from the down move, excuse me. And then it'll give you a second test. Is it seriously not fucking working? I'm gonna have a fucking conniption. Oh my god, man.